Hello, Dave Knight here once again at knightcapitalmanagement.com. You can also find me under my uh, YouTube name, that's Trade Craze. This is my blog that we're looking at, Knight Capital Management. Uh, Calvin and Hobbes, I wish they was still around, but anyway, that's what a futures trader feels like when they're trading in the zone. And the trade I want to talk about today was actually on Monday. That would be July 28th, 2008, where I said the ZB got 750 per two contracts on my long entry, and let's actually take a look at it as an overall picture right here. Overall, on Friday coming into Monday, market was trending down. We had a gap open in the morning, and so what I was originally looking for was a closing of the gap. That never happened. We moved up. My trading strategy tells me not to enter on the second bar off of a gap. That's kind of my trading method. Obviously, some people getting in at 114.07 would have been just fine. Anyway, you can see it rolled up here to 115.01, and we're going to talk about how I was looking at the trade itself. The total trade, once again, 750 per two contracts. The average daily range, how I used that at 115.02 and how that came into play. 187.50 between 15 to 21, and the 15 move to 01 move was worth $562.50. Combined trade $750 on the trade itself. So let's take a look at the market itself. Let me just clear some of this off. And let's get to where I made the entry. I talked about this movement up. This would have been a nice place maybe to be in right here. I like the fourth bar entry though. I like that method sometimes on my gap trades because sometimes it'll come up here and just start falling down. This bar right here actually tried a little bit if we actually reverse a little bit. So let's go back in time before the entry itself and let me show what I'm talking about. So there's your second bar. It would have been a great entry right here at 114.07. See that blue bar show up in the trading session in that 15-minute bar. So I was a little hesitant to trade. The fourth bar it entered. What I liked about that itself, let me blow this up a little bit for you. Whoops. Hold on. Well, I just lost everything there. Oh, come on. The phone has to ring right now? Don't people know that I'm recording? Just give me a second here. Let me figure out what I did here. Now, why is this not showing up? There we go. Let me stop that. Alright. Sorry about that little breakdown there. Let's see if I can zoom in a little bit for you now. Alright. I wanted you to take a look at this situation right here. First bar, second bar, third bar, fourth bar. Third bar close was a little bit higher than this bar. That's what I liked about it. 1, 2, 3. Fourth bar entry at 114.21, 15, excuse me. Target of 21. You're going to see how the ADR comes into play now at 115.01. Actually, I had my target originally at 114.31, just right below Friday's high in the market. So I'm liking the way it's looking. I have my stop, and here at 114.11. Let me move that over. 114.11. Edit. Extend to right. Get rid of that. Okay. So and then my target here at 114.21. So let's go ahead and back this up a little bit. This is what it looked like when I entered the market. 114.15. So now let's roll a little bit. Here, these are 1 minute tick bars once again. Boom. Let me stop. You can see within that 15 minutes, it rolled through it. Now this is when I made my decision that I was going to use the green line strategy, and I was going to actually use. What I liked about it was the long, nice movement up on 15. To move up. This was a nice, considerable move on the bond market. All within 15 minutes, it was straight up. It closed high on the bar. I really liked what it was looking like. The blue, the green, the red, everything was looking like it could go up in this kind of method up through here. So anyway, I put my stop at 114 and 15. I was out of half of my contracts at 114 and 21. So let's go ahead and roll. Let's see a spike reversal come in on this bar. Alright, let me stop. Back up. Here's the spike reversal. Now this had me a little bit concerned that we actually turned the corner. So even though off of this trade itself I had it at 16, the average daily range was at 114 and 12 and a half. I kept it at 114.16 because I want to make sure to make some money on the trade itself. Let's go ahead, because it could have just easily went back down, and it actually tried to go back down for a while. Let me stop, back it up. Now this 15-minute bar, the low of the bar was at 17, so I got lucky. That there's no. Sometimes it rolls through and gets you. Other times it keeps you out. I still liked everything was intact, in my opinion. This was not a very strong spike reversal down. If a spike is strong, it's going to roll real quickly. This one did not really. I like the way it was closed kind of in the middle of the bar, and I was keeping my stop at 16. The market itself told me the green line at 13.5, but I had mine. So let's just go ahead and roll so I don't run out of time. $115.01 once again. Okay, let me stop. Let me actually bring this out, zoom it out again. And let me pull everything in. There we go. So this will make it look a little bit better for you. Here we go. We're actually making the move up. 114.31. And what I also noticed here is that the average daily range and the daily high were extremely close together. I thought if we could take a shot at 115.01, I would play that strategy to see if it would make it there. So let's just go ahead and roll. This is the bar. Let me stop here. Let me clarify that for you. On this bar, I made the decision that I wanted to see if it could make it to 31, and our 115.01. I was going to come out. If we made a strong move, I was going to be out of this bar no matter what. I actually moved all of my positions up to 21, so I was protecting myself. And as we see, as it moves up here, right now at 114.29, around this area, right after this bar starts moving up, I'm going to tighten my stop to 27. Right now I tightened my stop, and right there it took me out. So 115.01, I was looking at this at 27. I rolled it up to 28, and I was following up behind it so I could see what I could get. Anyway, so make a long story short, the average daily range itself came into play at 115.01. The trade was at 114 and 15. The 114 and 21 was worth $187.50. The move from 114 and 15 to 115.01 was worth $562.50. The combined trade on this was $750 per every 2 contracts traded. So half my contracts off at 21, the other half off at 01. I want to wish you the best in your trading. This is Dave Knight once again at KnightCapitalManagement.com. Have a wonderful week trading. Good trades, everyone.